Shares in First Property Group are trading lower this morning on the back of its interim results. The company reported an 8% increase in profits before tax to £2.98 million. Total assets under management came in at £698 million, down from £706 million at the end of March. Ben Habib is the CEO and joins me in the studio. Ben, good to see you.
Good to see you.
Can you talk us through the results first and foremost?
Well, it was a good first half. It was a sort of steady as you go. There were no one-offs or exceptional non-recurring items of either income or expenditure. So what you see in our first half results are really an underlying performance of the group as well. And profits very close to £3 million, which is, as you mentioned, was 8% up on last year. So we're very pleased with that. What we haven't done in the first half, which we normally do, is buy a property or do some kind of deal which might give rise to non-recurring incomes in the form of either upfront fees or, in the event of a disposal, performance fees. And it's been slightly difficult to do deals because political uncertainty, some economic clouds gathering on the horizon, a kind of standoff between buyers and sellers where buyers are wanting a lower price because of the uncertainty and sellers still think we're in a very low interest rate environment and assets are valuable. So, slightly disappointing in not doing any deals in the first half, but actually very good set of results based on, steady as she goes.
So is that the reason why we're saying the share's down today?
I don't know why the shares are down. I would have thought the shares would have been, if I had to guess this morning at 6 a.m. what the share price reaction would be, I think steady to marginally up. The dividend is up as well, which you didn't mention, by 2.3%. And, that's a sign of confidence. The profits are up. So really the market should have taken some confidence out of these results. And
So was it an active decision not to do any deals in this half, or was it just that the right opportunity didn't present itself?
No, we couldn't. We're an opportunistic buyer of assets. So for us, a deal's got to be attractive before we move. Yeah. And we just couldn't find anything attractive in the first half that could close. We're looking at a number of deals at the moment, which may or may not close in the second half, and that could have a meaningful impact on our profitability if they do close. But sadly, nothing closed in the first half.
So in terms of assets under management, we've seen a little bit of decline since March. What do you think explains that?
Well, there are two reasons for that. The first is we sold a property in one of our funds and actually made quite a good profit for our shareholders in it. And the other reason was that the retail market has been hit quite hard in the United Kingdom over the last 12 months. And we saw some value reductions in one of the funds that owns retail property, a total value reduction of about 7 million. So it's the aggregate of the 7 million reduction and the property sale that has reduced assets under management.
So you mentioned the dividend there, a lift. Is that a key priority for you?
It is a key priority. We're a buyer of income. We describe ourselves as a buyer of high-yielding commercial property investments, which is an income play. And because effectively we are buying properties for income, we take the view that we should follow that through to the way we treat our own shareholders, and that we should have a progressive attitude to the dividend. And in fact, as you may or may not know, Victoria, we've paid either a consistent or rising dividend throughout the credit crunch period. So we take our dividend payment very seriously, and when we increase it, we only ever increase it to a level that we feel confident is sustainable. And we increase it by 2.3%.
So if we look at the share price over the last sort of 16 to 17 months, since the highs last June, it's down by about a third. Yeah. I mean, how do you explain that, and what are you doing to sort of tackle that?
Well, I think that there are two market reasons for it. One of them is regulatory. I think MiFID II has been very bad for small caps. The inability to distribute research now in the free way that we used to be able to do it is bad, because investors can't get info. But we have been materially adversely affected, as have all small cap companies, by the Woodford meltdown. Yeah. And there's a shyness now in, our typical shareholder would be a high net worth individual or a regional private wealth manager. And the regional private wealth manager particularly is shy of buying what they regard as illiquid stock, given what's happened to Woodford. And so I think there's a kind of exodus out of the market. and I hope that will return. There's no real underlying reason for First Property Group in itself to be down. We've made no adverse announcements, and actually the future of the company is bright.
So we've talked about the UK a bit. Poland is another key geography for you. Are there opportunities that you're looking at there, or even in other jurisdictions?
Yeah, we're not looking at other jurisdictions. We are looking at Poland, and we have 3 deals in the pipeline in Poland at the moment, with an aggregate value of around 60 million euros, some of which may happen and some which may not happen. You know, something ought to land. And we're looking at a deal or 2 in Romania as well. And in the UK, what we're looking for is a new theme. And what we're hoping is that the retail market in the UK might bottom out, and then we could start buying retail property again.
So is the uncertainty around Brexit really impacting your business?
It has created it's created a standoff between buyers and sellers. Right. That's what happened. The uncertainty is neither good for buyer nor seller. Yeah. The notion that buyers might pick up cheap assets because of uncertainty isn't right. What happens is you get market turgidity, and the market just doesn't move, and you don't get volume. So volumes are down. If you look at volume trading in UK property over the last year, it's down quite a lot. And that is because there's this kind of Mexican standoff between buyers and sellers. What we need is Brexit to be done and for the market to become more fluid again.
So switching from your CEO hat to your Brexit MEP hat, what do you kind of make of the political climate right now?
Well, it's remarkable. We've had 3 years of obvious constitutional crisis, and I've been watching the Tory party and the Labour Party, and both of them have made lots of policy announcements. Not one of them has made a single announcement about how they would ensure that a political crisis like the one we've just come through doesn't happen again. No constitutional reforms offered by either of them. And it seems to me that they're just comfortable with exchanging the reins of power from time to time between each other, and for the old system to go on unchanged. And that really is a big statement, I think, for the electorate. The electorate need to look at that very carefully and realise that they're voting for the same old devils who've caused the problems that this country's been in, and they really ought to eject both the Tories and the Labour Party.
So are you disappointed then that your party won't be challenging some of those Conservative seats? Yeah,
frank answer is I am disappointed. I think with the benefit of hindsight, and now we know that the Tories didn't stand down their candidates against us against the Brexit Party in those seats where Tories haven't won for over 100 years, and I think there are about 150 seats like that in the United Kingdom. With the benefit of that knowledge now, actually, I wouldn't have stood down more than perhaps 180 PPCs of our own against those Tory PPCs who genuinely believe in Brexit. There are 136, by my count, Remain-orientated Tory MPs who are standing for election. And that's a bad thing. That can only be bad for the direction of travel of the country.
So the last time we spoke, you said that you thought that we could have a second referendum, or we could have a general election. Obviously, we've got that general election on the 12th of December. Yeah. Is a second referendum still a possibility?
Well, if Labour win, which I think is a remote possibility, I personally think Jeremy Corbyn is unelectable, but if Labour win, then that is their manifesto policy, to have a referendum.
And finally, what would you say you're trying to achieve in your role as a Brexit MEP?
Well, my role as an MEP is to make sure that I make myself redundant ASAP and make myself properly redundant. Yeah. So that the UK leaves the European Union whole, which under Boris Johnson's deal it doesn't. We kind of leave Northern Ireland partially behind, leave it whole, and genuinely get control of our cash, our laws and our borders, which again, Boris Johnson deal doesn't deliver. So my task in a post-election world will be to do my best to make sure that Boris Johnson's feet are held to the fire and that he actually delivers a proper Brexit, assuming he wins the election.
All right, Ben, thank you very much.
Thank you very much.
That was Ben Habib, CEO at First Property Group, joining me on set. I'm Victoria Scholar, and thanks for watching IGTV.